Good morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Friday, November 22nd. Prices are mixed here overnight, a little bit firming up a little bit as we get closer to the pause. Corn right now is 2 to 3 better. Same in the nearby bean contracts. The back months are steady to a little bit lower. Wheat is about 1 to 5 higher, let's call it. 1 to 2 better in the meal, while oil is down about 35 points. Under a little bit of spillover pressure from Malaysian palm oil, which was down nearly 3% overnight. Speculative traders were net sellers across the ag space yesterday, extending their short positions in beans, meal, and in wheat, while adding or taking off, liquidating some of their long positions in both corn and bean oil. Open interest in corn fell nearly 15,000 contracts yesterday due to liquidation of the December contracts ahead of next week's first notice day. We've got speculative traders still long, over 110,000 contracts of corn, 58,000 in the oil, while short nearly 70,000 in the beans, 40,000 wheat, and 30,000 meal. Coming into today, both corn and wheat are slightly higher for the week, while the bean complex is lower across the board, largely driven by the favorable growing conditions in South America and also with the uncertainty over U.S.-Chinese relations, along with green energy policies moving forward under the incoming Trump administration. Late yesterday, the Buenos Aires Grain Exchange reported Argentine bean plantings advanced 16% in the past week to 36% complete. They held their acreage estimate unchanged at 18.6 million hectares. Recall that acreage forecast is about 10% above that of the USDA. Corn plantings in Argentina have stalled out a little bit, focusing their efforts on the beans. They did advance 1% last week to nearly 40% planted. They kept their corn acreage estimate also unchanged at 6.3 million hectares, down 20% year over year. Wheat harvest is moving along, advancing 12% for the week to 29%. Strong yields coming out of Western Australia are driving up production expectations there. In September, ABARE forecast production at 31.8 million metric tons. That was 23% above the previous year and very close to the USDA estimate of 32 million metric tons. ABARE's next production estimate comes out in early December. Some private forecasts are as high as in the 33 to 34 million metric ton range. U.S. drought conditions continue to drop with rains here across the Midwest. The winter wheat areas in drought at 40%, down 3% for the week, and well below the recent peak of 62%. This has also helped raise river levels, which in turn has helped drop the barge rates across the U.S. interior river system. East corn just remains in a pretty tight trading range, resistance at the November high, 434 3/4, with support at the 50-day moving average at 418 1/4. Strong demand from Mexico and use for production for ethanol continue to provide the underlying support and give a boost here to the spreads. Beans continue to hold support. Jan beans continue to hold support above its contract low at 973.5. However, all the other contracts did establish new lows. The path of least resistance, to me, it still appears to be to the downside until we get a more threatening weather forecast in South America. But a little bit of a bounce here as we head into the weekend. New monthly low for Dees bean oil overnight with next support at 41.36. And Dees meal just continues to hover above its contract low with major support below the market at 280. Heightened tensions in the Black Sea have lifted wheat prices off their recent lows. However, upside would appear to be limited with ongoing harvest in the Southern Hemisphere and improved conditions here in the U.S. Thanks for listening, everyone. I hope you have a great Friday.